What are the top 5 things that you need in your trading plan so that you can sustain your trading business and also so that you can make more profits in the long run coming up next. So when it comes to crafting a trading plan, you need 5 very important things. Now, why is it so important to have a trading plan is because, number one, 90% of people don't even bother to do it. So if you want to achieve their results, then go ahead, don't write a trading plan. Don't even watch this video. If you want to achieve the top 10% of results, then this video is for you. If you want to treat trading like a business, if you want to take this seriously, then the first thing that you need to do is to craft a proper trading plan. Now, if you don't want to craft a trading plan, it's like doing a business without having a business plan. So the first thing that you need in a trading plan is to understand exactly when should you enter, whether it's a market order or pending order, but know exactly at which point in time should you make a buy or a sell. In other words, when should you open your trade? You don't want to go in too late and you don't want to go in too early. So which is the best price to go in? You need to know that, and in order to know that, you need to have a proper technical analysis system, because what fundamentals can do for you is only help you determine the overall direction of the future, but it doesn't really let you know the exact price that you should enter. Okay, so make sure you have a good system in place. First, the buying and selling part is the easy part. All you need to do is just go to the platform, then click on the buy and sell, and then that's done. You are a trader, right? This is the easy part. The hard part is where should you take your profits, not to be too greedy, or where should you cut your losses. And hence, that's why the second thing that you need is to determine where should you set your target price. Or in other words, some people call it where should I take my profits, okay? Your TP level. Now make sure by now you already know what TP is, because it is a very common term used by a lot of traders, okay? When it comes to TP level, you don't want to set it too tight, you also don't want to set it too wide. When you have a TP target that is way too tight, of course, yeah, it is fun to trade that way, because most of the time when the price moves a little bit, then you hit your TP target. Then you achieve a high win rate, then you feel good about it, then you can boast to your friends, hey, you know what, I have a 99% win rate. But then, what you don't tell your friends is that when you get that one stupid loss, it wiped out all your 3 to 4 months of hard work, which is so not productive for you. Again, you don't want to set your TP level way too wide all the way to the ceiling, such that the price would always go all the way up. Then when the price doesn't have enough momentum, or when the fundamentals doesn't apply anymore, then the price would retrace just before it hits your TP target. You don't want that to happen very often. So your job is to find an optimal level where the target price is not too tight and also not so wide that every time when the price goes up and then it comes back down, that's really frustrating to trade that way. Same thing for the third element. So the third element that you need, okay, it's normal to have 4 to 5 losing streak. It is just part of the business, okay? So when the trade doesn't go the way you want it to go, where should you cut your losses? Or in other words, where should you put your stop loss? When you put a buy today, you don't want your stop loss to be way too tight, such that when the price moves a little bit, then you'll get stopped out really, really quickly. You also don't want your stop loss level to be way too wide, such that every time when the price hits your stop loss, you incur a loss that's way more larger than your profits, that your loss could wipe out all your previous 10 to 20 winning trades. Now, if you trade that way, that's like a total waste of time. Please never ever trade that way. That's totally amateur thinking. Please take care of your risk to reward ratio. Think about the risk first before you even think about the profits that you're making. Then of course, a lot of people ask, is it better to use a mental stop loss, or is it better to use like a manual stop loss that you set? If you're a beginner, I don't recommend doing mental stop loss, because while your money is on the line, when the trade is open, that is when your emotions is going to drive you crazy, especially if you're a beginner, especially if you know that trading psychology is not on point yet. When you use this mental stop loss strategy as a beginner, you will start to do many irrational things, and then once you close the trade and then you wonder, hey, what the shit did I just did? What a mental stop loss would cause you to do is that, let's say you make a buy right now. Okay? Let's say you have a mental stop right here. I'm gonna cut my losses right here when the price reaches here. But then because it's a mental stop loss, once the price reaches here, you open the platform. Okay, now I'm really at a big loss. I don't want to take this loss because it's so big, you know, like I hope that the price is going to retrace. Let me just pray as hard as I can so that the price will eventually retrace all the way back up. A lot of beginners, they wouldn't cut losses here. So what's going to happen most of the time is that the price will go all the way downwards again. Same thing, they're going to say, okay, when the price comes here, I'm going to really cut my losses here. But then when the price comes here, then they're like, oh my god, I'm in such a bigger loss right now. I can't afford to take this loss. It's going to wipe out my previous 20 winning trades. Then they wait and pray, hoping the price would go back up, which in fact didn't. And this is how a lot of accounts get blown. Unless you already know that you have a very strong trading psychology, then you consider using mental stop loss. Now here's the thing, demo account profits doesn't indicate that you make the same amount of profits in your live account, because demo account and live account is a totally different ball game. A lot of people think that, you know, when I'm crushing it in demo account, I also crush it in live account. Now it doesn't work that way, because in demo account a lot of times our hard-earned money is not on the line. When it comes to live account, we'll start to sweat even if we lose a little bit of money because our hard-earned money is on the line, and then we start to think irrationally. And a lot of times, depending on the broker that you choose, the broker would over-extrapolate your results in your demo account, help you make as much money as possible. Some of them won't even trigger your stop loss in your demo account to give you the illusion into thinking that, oh, you know, I'm such a good trader, you know. Because some of these brokers, they would want to induce their client to go open a live account with them. So make sure they choose a proper broker first while you're crafting your trading plan. Now when it comes to broker, I'm going to talk more about it in the next few videos, so don't you worry about it, okay? Fourth thing that you need is your little risk management plan. Okay, so within your trading plan, your business plan, is your risk management aspects. Okay, you have a little risk management plan right inside. Okay, it shouldn't be separate from each other. It's like when you have a business plan, you also have a marketing plan inside. You also have an operational plan inside. You need a couple of things. All right, you need to determine what kind of leverage that you want to trade with. Now if you are a beginner trader, never go to a leverage of more than 1:50. I don't care if you are the best risk taker in the world as a beginner, you gotta start with this so they can train your mind, train your psychology. So aside from leverage, you also need to determine what is your percentage drawdown. Okay, then after that, you also need to determine what's your risk per trade. These are just some of the things that you need in your risk management plan. I'm not going to detail in each of these aspects, drawdown, percentage, risk per trade, and what the other aspects of risk management, because risk management is so much more. What lot size should I use? What volume should I use? It also involves which are the times you should trade. Okay, look at my, this is not good, okay? You need to determine what are the hours that you should not be trading, what are the hours that you should be trading, which day of the week you should not be trading, because some days of the day are more risky for you, some days are safer for you to trade, which currency pair is safer to trade for your system, for your strategy. You need to know all of that. Please don't mind the noise that you hear next door because it's very happening in the office tonight. Okay, so the final thing that you need in your trading plan, determine what kind of trader that you are. And what kind of trader that you are is going to determine what trading time frame that you choose to trade with. Now there are many different time frames. Again, a lot of people ask, which one is the best time frame to trade in? Then you need to watch my trading time frame video. If you can't find it, then I'll put it down in the description below. But come on guys, I only have 150 videos as of this video, okay? If you can't find a simple video, then you can't become a trader, okay? When it comes to becoming a trader, you need to rely on yourself. You need to operate like an entrepreneur. But aside from that, with so many time frames that you can pick from, M1, M5, M15, M30, H1, H4, D1, weekly, monthly. Okay, if you have already watched my trading time frame video, then you already more or less know, okay, which one is more suitable for you. But if you want to increase your chances of becoming profitable as a beginner trader, consider choosing the higher time frames. Statistics shows it. If you look at some of the top hedge fund managers, top traders in the world, including Asia, Singapore, most of them trade H1 and above. Seldom do I see very successful scalpers. If you are a good scalper, then good for you. And again, when you trade longer time frames, the thing is you can reduce your cost of doing business. You can reduce your cost of trading. Because right here, what you are doing is that you are scalping. You're opening 50 to 100 trades per day, meaning that for every trade that you make, you are paying an amount to your broker. Whereas right here, you're making about 1 to 2 trades per day and sometimes per week, which means that you also pay less cost to your broker. And the second thing is, when you are a scalper, you need to have no life, sit in front of your computer, and then monitor the charts every second, every tick. Personally believe that life is so much more than just trading. If your aspiration is to become a multi-millionaire, you need to take care of your other business. You need to look at the other markets, stock market, futures market, options market. You need to take care of your other businesses that you're invested in or that you're owning, that you're operating in. You need to take good care of your properties. You have no time to just sit in front of the computer and just look at the charts. So personally, what I prefer is that I prefer to make less trades right here and then make more profits. I used to, when I first start out, think that the more trades I make, then the more profitable I become. Yeah, of course, I make 50 to 100 trades a day right here as a scalper. Good. It seems like I'm very busy doing a lot of work, but in fact I'm not. When I start the transition to higher time frames, I make way less trades. In fact, sometimes 1 trade a week. I make more money as compared to making 500 trades a week. Again, it's not about the amount of trades that you make per day, per week. It's about the quality amount of trades that you make. This is what I learned the hard way. Let me know in the comment section down below, how has your trading plan helped you, or what extra things do you include in your trading plan that I did not mention. Okay, so these are 5 things that you need in your trading plan. Make sure that you have it in place and make sure that you follow it every single time when you trade. Your trading plan is there for a reason. Don't put it aside, don't neglect it, okay? So with that, I'm Careful and I'll talk to you in the next episode. Bye.